If you're serious about getting funded in 2026, you probably already noticed that most top 5 prop firm lists are either outdated, sponsored, or written by someone who's never actually gone through a single evaluation. This one is different. I track prop firm performance, payouts, rule changes, platform reliability, and trader outcomes. Not for any one firm, for the industry. And what I found over the past year is that the gap between the firms worth your time and the ones that aren't is wider than most people realize. Today, I'm walking you through the 5 that I believe legitimately belong at the top of that list right now, based on data, structure, and what actual traders are reporting. No sponsorships, no affiliate rankings, just an honest breakdown. Let's get into it. Before the list, I want to be transparent about the framework I'm using, because best is meaningless without criteria. I'm evaluating each firm across 5 dimensions. 1. Market access, forex, futures, crypto. Can you trade across markets, or are you boxed into one? 2. Account range and scaling. Where do accounts start, where do they cap, and is the growth path real? 3. Platform quality, professional-grade infrastructure, or a white label setup that can't handle real volume. 4. Profit split and payout reliability. The headline number rarely tells a full story. I care about what traders actually receive and how consistently. And 5. Rule transparency, hidden drawdown language, vague consistency rules, restrictions buried in the fine print. This is where most funded accounts end. I'm looking at how clearly each firm communicates what's actually required. 5 criteria. 5 firms. At number 5, we have FundingPips. FundingPips has built a clean, well-regarded operation in the forex and indices space. Their evaluation is a straightforward 2-phase challenge. Up to 90% profit split, account sizes up to $200,000, and a payout reputation that traders consistently speak well of. When they say they'll pay you, they usually do. What earns them this spot is execution reliability. For traders focused on forex and major indices, the trading conditions during the funded phase are consistently reported as tight and stable, where they're limited. Futures access is minimal, and crypto isn't a core part of the offering. If your strategy requires moving across asset classes based on market conditions, FundingPips won't fully support that. For a specialist forex trader, that might not matter. For a multi-market operator, it does. Bottom line, excellent for forex-focused traders. Not the right fit for anyone with a multi-asset approach. Number 4, DNA funded. And the reason they're on this list starts with something that most prop firms completely lack: regulatory backing. DNA Funded operates under DNA Markets, an ASIC-regulated Australian broker. In an industry where the average firm is an offshore entity with zero accountability, that structural layer matters. It doesn't guarantee anything, but it meaningfully raises the cost of bad behavior, and that changes the risk calculus for traders considering where to put their challenge fees. Their offering is genuinely broad. Over 800 instruments across forex, commodities, indices, crypto CFDs, and individual stocks. Account sizes run from $5,000 to $200,000 across 6 tiers. Profit split reaches 90%, though the top tier requires an add-on. They run on MT5 and Deekstrade, both platforms that experienced traders already know. 2 honest caveats. First, leverage is capped lower than most competitors due to ASIC constraints. That's a real trade-off for certain strategies. Second, the $200,000 account ceiling is a hard limit for traders who scale aggressively and want access to $400,000 or $500,000 in capital. They will hit that wall. So, bottom line, the most credible regulatory structure in this comparison: strong instrument breadth. The account cap limits its appeal for higher funded traders. Number 3 is BrightFunded, based in Amsterdam, and what stands out here is the quality of their rule design. Most prop firms use trailing drawdown. Your floor moves as your account grows, which means a single bad day after a strong run can wipe out your funded status, even if your overall account is profitable. BrightFunded uses fully static drawdown, 10% maximum, 5% daily, calculated from your opening balance, period. You always know exactly where your floor is. They also have no consistency rule, worth emphasizing. A consistency rule caps how much of your profit target can come from a single trading day, often at 30 to 40%. It's a restriction that penalizes traders who capitalize on high-conviction setups. BrightFunded doesn't impose one. Their platform stack MT5, C-Trader, and Deekstrade is professional. Accounts go up to $400,000. Profit split scales to 100% as traders progress through growth tiers, which is one of the better scaling structures in the industry. The gap, no futures access, no rhythmic. If CME futures are part of your trading, BrightFunded isn't built for you. And their single evaluation format, 1-2-phase path, offers less flexibility than some traders want. Bottom line, among the fairest rule sets I've tracked in this space, the right home for forex and CFD traders who value drawdown clarity and clean scaling. Number 2 is FundedNext, currently the most expansive multi-asset prop firm operating at scale. The scope here is significant. Account sizes up to $4 million. For evaluation models, 1-step, 2-step, instant funding, and a future-specific track. Platform support across MT4, MT5, C-Trader, and Match Trader. Full access to forex, indices, commodities, futures, and crypto within a single account ecosystem. For traders who move across markets, very few firms match this range. Their profit splits reach 95% with add-ons. Their payout track record is one of the stronger in the industry. They publish payout data publicly, which is itself a signal worth noting. So why not number 1? The complexity of their offering creates friction. With 4 challenge types, multiple add-on tiers, and varying rules across models, some of which include consistency restrictions during the evaluation phase. You need to read carefully before purchasing, and then you better have a memory like a steel trap. Understanding exactly what you're buying requires more due diligence here than with any other firm on this list. That complexity is manageable for an experienced trader who knows precisely which model fits their strategy. For a trader still developing their evaluation approach, it introduces unnecessary variables. Bottom line, the broadest offering in this comparison, exceptional for experienced multi-asset traders. Requires careful research before committing to an evaluation path. Finally, number 1 on this list is Paragon Funded Trader, and given that I've spent this video being critical where it's warranted, let me be just as precise about why they're here. The core case for Paragon comes down to 3 things: account ceiling, futures infrastructure, and rule clarity. Account sizes run from $5,000 to $500,000. That's the highest ceiling in the comparison, above BrightFunded's $400,000, and more than double what DNA Funded offers. For traders who perform and want to scale, that ceiling matters. Profit split reaches 90%, with bi-weekly payouts on a 24 to 48-hour processing window. Their payout record is publicly stated as 100%. Every funded account that has ever earned a payout received it. The platform stack is where it gets interesting. Deekstrade, C-Trader, Match Trader, GUI Pro, and Rhythmic. Rhythmic is a differentiator. It provides direct CME exchange connectivity, the same infrastructure used by institutional trading desks. This is a futures simulation, or a CFD wrapper on futures pricing. It's real market access. Of the 5 firms on this list, Paragon is the only one that fully supports a serious futures trader. The rules are deliberately simple. No minimum trading days. Clear, static drawdown thresholds. Transparent news trading policy. No hidden requirements that materialize after you've passed. Paragon runs on FBFX tech infrastructure, the backend powering over 150 prop firms globally, which means their operational foundation has been stress-tested at industry scale. Where Paragon doesn't lead, MT4 is not in their platform stack, which matters to some traders. And their profit split cap of 90% is below FundedNext ceiling of 95%. But when I run the full framework, market access, account range, platform quality, payout reliability, and rule transparency, Paragon is a firm that holds up across all 5 without a significant gap in any of them. So, to summarize, here's where each firm lands based on what I've tracked. FundingPips, reliable payouts, clean for its experience. Limited multi-asset. DNA Funded, best regulatory structure. Widest instrument range. $200,000 ceiling. BrightFunded, fairest drawdown design. No consistency rule. No futures. FundedNext, most expansive offering. Requires careful evaluation model selection. Paragon Funded Trader. Highest account ceiling. Genuine futures access via rhythmic, clean rules, 100% payout track record. There you have it, friends. We'll be back with more prop firm analyses coming soon. See you then.